Hello and welcome to the weekly video, Capital Spreads weekly video. Once again, joined by Bill. Good to see you, Bill, Chief Economist at Markets.com. So, central banks very much the theme this week, Bill. But before we go on to them, I just thought we'd maybe discuss the poor data coming out of the US. This week, bad manufacturing numbers again, and that's been a theme for some months now. The GDP obviously has come down from over 4% at the end of last year, 1.5% now. Are we heading for a recession?
No, not at all. And I think one of the things tomorrow, when we get the major ISM services, now the ISM data we got earlier this week was manufacturing, and manufacturing is only 12% of the US economy. So I'm expecting the ISM services to be back above 50. And if you also look through most of the regional feds, employment is not busting out all over, but employment at least seems to be stabilizing.
Yeah, okay. Well, we'll see. Obviously, we've got the farms tomorrow, but they haven't exactly excelled either. So this would obviously mean why the Fed last night, that moves us sort of neatly onto the Fed. Last night, nothing really from Bernanke. No. Markets weren't too disappointed either, but then I suppose we didn't really expect very much. But are we going to get QE3?
I would expect, because remember, the next meeting is the 13th of September. We will have tomorrow's non-farm payroll, and then we'll have the August non-farm payroll. So when the Fed meets again, we'll have two more non-farm payroll numbers, two more ISM numbers. And I think one of the things, as you just said, Mr. Bernanke basically told us at the old Humphrey Hawkins in reference to negative deposit rates, basically saying, well, we've only seen it a couple of weeks with the ECB. We need another probably a month or two. I would expect we will probably get something in reference to what they call it in the States, IOER, interest on excess reserves, something like that. Probably another smaller round of QE3. But the key thing is here will be, we got something yesterday from the Office of Management Budget. Basically, they have reduced the quote, the concern about the fiscal cliff. The deficit has been rolled over now to the 31st of March. So if nothing else, that will at least take that away as a political tool going into the November 6th election. Yes, I would expect something from the Fed. And as we talked about earlier, when the Bank of England does nothing, we don't get any statement for 2 weeks. But had there been the possibility of reading a statement today from the Bank of England, it would not have surprised me if it had almost been copied word for word from what the Fed said last night. We're concerned about domestic slowing, global slowing, and then the Eurozone crisis. Yeah. If you want to ask me about that.
Just don't get there before I'm ready. But yeah, so of course, obviously it would seem that no big bazookas from the Fed.
No.
And really, I suppose they can't ahead of the election necessarily. No,
they really can't, because remember, the Federal Reserve is an independent body. So the last thing they can do, and I would expect just fine tweaking on the 13th of September, because anything later, remember, the election is less than 100 days away on the 6th of November. Anything, interest rates, decision, this, that, the other, the Republicans and the Democrats, whoever loses on the 6th of November could use that as, wait a minute, it's not our fault, it was the Federal Reserve, and they cannot be political in any way, shape, or form.
Yeah. Okay, now I know you've been itching to talk about the ECB. I mean, Draghi comments last week, he was saying he was going to do anything in his power to save the euro. We didn't see that today.
No, I think one of the things, if you looked last Thursday, his body language was forthright, demonstrative, very positive. And we saw a major move in the euro in the space of 24 hours, up 3 big figures. We saw a drop of almost 13,000 short euro-dollar contracts. But over the weekend, maybe it's the contrarians basically starting to say, wait a minute, I'm not sure he's not bluffing. We went into Monday, all of a sudden we started seeing the euro start to sell off. Today, quite interesting, okay, between 2 minutes before the decision at 12:45 and 2 minutes after. The euro went from like 122.63 to the high of the day of 122.97 on small volume, okay? That's sort of Well, as we saw, within a half an hour of the press conference, the euro dropped over 100 pips, and all of the European equities, which were in green, oh, like mackerel, you know, and we all really lost it. And I think if you saw the press conference, on at least 3 occasions, when he was asked a question, you really didn't fully understand my speech last week. And he went from very positive last Thursday to an incredibly defensive scenario today.
Well, it can't do much for his credibility,
Yeah.
and that really is being called into question. Obviously, things going forward, we can only hope but wait. It just opens more uncertainty,
Yes.
and this year's end crisis is going to roll on and on.
Yeah, and I mean, we saw that from the Fed last night. Anything you get is the concern about the Eurozone crisis. Now, one of the things that I think people got ahead of themselves last week, remember the Germans have to vote on this constitutionality on the 12th of September. And no matter what the ECB does, tries to do, assumes that they're going to say, remember, they can't just be the lender of last resort. You know, they will have to try to support it. And one of the things that we all know, I mean, this bailout fund, you know, it can't be peanuts. It has to be 2.5 to 3 trillion euros because Spain and Italy. And we saw that. We saw Spanish and Italian bond yields back up dramatically during the Draghi speech, where you saw buying of gilts, buying of bonds, buying of treasuries, and even buying of French.
Yeah, interesting. Yeah.
So it's,
well, I think it leaves the door open for a lot more questions in future. We look forward to seeing you again. Thanks very much again, Bill.
You have a lovely 2-week holiday. It'll be nice to talk.
I'm not away next week. It's the week.
I was going to say, because I'm really looking forward to talking to a real pro.
Very good. Good to see you, Bill. Thanks a lot.